At this moment, I want to introduce Elvis. And Elvis is the man who joined Aecon in January 2024 as the growth manager for Vuka, Kenya's pioneering investment platform that enables retail investors like you and I to participate in the Aecon Student Accommodation Income Real Estate Investment Trust, that is the ASA I-RATE. And with a wealth of experience spanning real estate, investments, and fintech, Elvis brings a unique blend of skills to his role, overseeing the comprehensive growth strategy for Vuka. And his commitment to driving the success of Vuka aligns with Aecon's vision to provide accessible real estate investment opportunities to retail investors here in Kenya. Elvis holds a bachelor's degree in international relations and security studies from Daystar University and also holds certification from the Chartered Institute of Securities and Investments. And in his capacity as growth manager, he has leveraged his multifaceted background to propel Vuka's growth, contributing to the broader mission of democratizing wealth creation through innovative investment solutions. Ladies and gentlemen, Elvis Onchwari. Welcome, sir.
Good evening, ladies and gentlemen. I'll spend a few minutes just to take you through where Vuka is today and what are the future plans that we have for you as our investors. Now, you would agree with me when I say that Kenyans love real estate. However, our love for real estate is not real. Why do I say this? Because if you look in the market today, there is over 12 trillion Kenya shillings of capital tied up in land. And I'm speaking about Nairobi, Machakos, Kajiado, and the Kiambu region. Now, what this has done to many of us is that we end up asset rich and cash poor. But let's spend a few minutes to analyze what drives our love for real estate. One of the keeping drivers that drive us towards investing in real estate today, one is our survivorship bias. If we look at this, what I mean is that a lot of us know someone who's made it in real estate. Someone came and told you they bought a parcel of land very cheaply and they've been able to sell it years later as a profitable investment. Now, what this does, it makes you believe that real estate is a sure bet, that you can't go wrong. In reality, a lot of us have lost our hard-earned money and we've locked in our capital in real estate. Another key factor that drives us, our love for real estate, is our culture and tradition, which states ever since the colonial era, it states that for you to make it in life, you have to climb your status by investing in real estate, buying a parcel of land, buying a home, buying an apartment. And this is just some of the reasons why we say at Vuka is that we as Africans or as Kenyans, we are not poor. We just invest poorly, and we take real estate as an example because a number of us invest in real estate driven by our emotions and not in a rational manner. Now, when you look at direct real estate investment comes with one, high purchase and management costs. It ties up a lot of our capital. I like to say that almost every Kenyan knows another Kenyan with a parcel of land we're unable to liquidate. It does lack liquidity. I believe during the COVID era, we saw a lot of investors trying to liquidate their assets in terms of land and apartments to get some cash, and they were unable to. Another key aspect of direct real estate is that it operates in an unregulated environment. I think it's in direct real estate where you will easily see a developer just needs county approvals. They will go get his approvals, develop a real estate asset, come and market it to you in the sense that it will give you a guaranteed return. Yet in reality, it does not. Hence, you have to be very wary because real estate assets are the most marketed investments today, which drives us to believe that real estate is the only way to generate wealth. Another key factor that we like to look at is that a number of times direct real estate is often driven by unrealistic capital gain expectations, skewed land and property valuations. Now, what I mean by this is that it's, again, in Kenya, it's a Kenyan thing whereby when someone sells you a parcel of land, they promise you that a road will be built somewhere here. In reality, you keep on waiting and realize that there's no such thing that happens. Hence, you end up tying your capital in direct real estate. Now, if you sit back and look at it in a holistic manner, the truth is every investor seeks a real estate investment that is profit-making. Think about it. When you venture into real estate investment, you're looking for an investment that is located in a high-demand area, You're looking for something that has a high occupancy rate that will be able to generate for you consistent returns. You're looking for something that appreciates yearly. You want to feel proud that your investment is actually appreciating in a realistic manner. You want to avoid maintenance headaches. You're looking for something, again, exempt from most taxes. You're looking for something affordable to acquire. I believe most of us end up taking mortgages and loans to venture into real estate. Again, it's not a bad thing. We just have to consider, are you choosing to invest, or are you looking for something to fulfill the need of security that you may have? And lastly, you're looking for something that has a low grabbing risk. What I mean by this is that a number of us end up buying land in the outskirts, and you find your maintenance costs become high because you have to build a fence to take care of that person. You have to hire someone. And in reality, you end up having maintenance headaches day after day. Now, the option to invest in such real estate for retail investors is rarely available because it requires time to build, it requires time to rent, it requires a lot of research. And for you to generate profit from it, you have to take real estate in a thematic manner whereby you forecast future trends. You look at how the market is performing. Now, if you take all this, what Econ did, being the pioneer in the sector, we launched Africa's first student accommodation real estate investment trust, giving investors the opportunity to get into the lucrative student housing market. I remember before Econ launched the student accommodation, ventured in the student accommodation housing market, a lot of us, again, we will build a hostel, maybe just have 3 units, but a number of us didn't do the research and think that student hostels could be what it is today. Now, the opportunity to invest in high-value real estate for a while was only open to institutional investors because of the huge sum of capital it requires. However, through Vuka, this opportunity is now open to you. So what is Vuka in a nutshell? Vuka is Kenya's first investment platform that enables individuals to invest in secure, regulated, resilient, affordable, and profitable real estate. Now, let me venture into imagination for a few minutes. When you invest in Vuka, look at it as you becoming a landlord in a property rental business without the hassles of maintenance or you holding the asset directly. Now, if you are a shareholder in Qwetu Qejani Student Residencies, you could consider yourself as a landlord, but now you do not deal with the headaches that come with maintenance, right? Now, as an investor in Vuka, you earn in 2 ways. You earn dividends, which comes consistently. It is paid out to you twice a year. And on top of that, you enjoy capital gains, in the sense that as this asset appreciates, you also benefit from the appreciation as your investment value also increases. So what makes Vuka stand out? Now, usually I don't like comparing investment products, as I like to say. It has to be Vuka and others. However, if you were to look at Vuka in terms of affordability, in a sense that with Vuka you can invest from as low as 2,500 bob. If you look at it in terms of regulation, in a sense that it is a platform that is regulated. Now, if you to take that and compare it with rental units or plots of land, you realize both of these assets that Kenyans love are neither affordable or regulated. If you look at other factors such as tax incentives, Vuka does have tax incentives. In this case, the income that is paid out to you in form of dividends is only taxed at a rate of 5%. You do not pay capital gain taxes, you do not pay stamp duty taxes, the legal fees that come up with purchasing a rental unit or purchasing a plot of land. If you look at consistent income, Vuka does pay you consistent income. If you look at long-term insurance, civil products, LSE equities, money market funds, which are all financial assets, because we do encourage you to pick up financial assets. All these other assets pay you consistent income. However, the 2 assets that we love, the 2 physical assets we love, which are rental units or plots of land, most of the time it lacks giving you consistent income. And one of the key things that you look at when investing is the ability of these assets to give you consistent income stream, especially as you grow older, right? Because you want to move from being asset rich and cash poor to being able to have liquid investments that pay you passive income. If you look at these 3 other factors, which is quality of assets, liquidity, capital preservation, you do realize that Vuka ticks all these assets. When you look at the quality of assets you're investing in the Qwetu Qejani Student Residencies. And a number of people walk around the streets and ask, so who exactly owns the Qwetu Student Residencies? Now, I'm here to tell you that you as an investor, you co-own these assets. If you look at the various other investments in terms of quality of assets and liquidity, especially rental units and plots of land, they do lack liquidity. Again, you're not able to easily sell your rental unit, or your plot of land. However, if you look at capital preservation, a lot of these assets would ideally to serve your capital. Now, the purpose of this is for you to understand that there are various investments out here today, right? However, if you're looking for investments that tick all these boxes, then Vuka is an ideal choice for you. So what has been our journey? We started Vuka in 2021. We were admitted into the Capital Markets Authority Regulatory Sandbox. And this is a regulatory environment that enables a live testing of innovative products before they launch into the mass market. In 2022, we were successfully released from the Capital Markets Regulatory Sandbox, and we ended up launching Vuka into the mass market. However, we chose to launch it as an exclusive invite-only club, meaning you could only get an invite from an existing member, or you could get an invite from one of our internal advisors. Now, a lot of people have always asked, why was it an exclusive invite-only club? And one of the key things you looked at when launching Vuka is that this is a very new product into your market. So we decided to take an approach that focuses first on educating you as an investor, enabling you to understand that this is a different investment. This is an asset you actually diversify to. I know a lot of investments, money market funds, bonds are becoming a lot easier to understand. So in our case, we took a slow approach to our goal. In 2024, we revised our fees. I believe earlier investors were being charged a 3% service fee. They were being charged an annual fee as well to trade with Vuka, and some of the feedback we got from a lot of our investors is that your fees are too high. Hence, we ended up revising our fees in 2024. At that point, we saw our assets under management surpass 200 million, and we did see a lot of investor participation and interest on our product, Vuka. Now, the first product that we launched is a structured investment product designed for investors who prioritize stability and predictable income. Now, a lot of our investors today in Vuka invest in the Acorns rate accommodation income rate. In simpler terms, if you are keen as you walk within Nairobi streets, you will notice that we do have properties that are already stabilized, getting an income. You do see students moving in and out of these properties and living there. Then you see properties that are still under development. Now, our initial product offering would only enable you to invest in income and stabilize and income-generating assets. As a result, this was a low-risk option for a lot of investors. Now, we've taken a strategic decision to rename this product Vaua Imara. And this just goes to show that, and one of the reasons we're renaming this product into Vaua Imara, it's because this is an investment that has demonstrated resilience. It has paid consistent incomes year after year. The assets, the Acorn Student Accommodation Income Real Estate Investment Trust was in the market even after COVID, posting a return. Hence, we've been able to see that this is a resilient product. It has been in the market and it continues to deliver consistent returns to you as an investor. Now, what are some of the features? You remember as I started, I stated that as an investor, imagine yourself as a landlord in a rental business without the hassles of direct ownership. Now, when you picture yourself as a landlord within the Vuka ecosystem as we invest with Vuka, you benefit from various aspects. One of them is that you get consistent returns. Now, we pay out our dividends every 6 months to investors without fail. I think as a matter of regulation, the REITs have to pay at least 90% of their income back to investors. We offer you principal protection. Now, what we mean by this is that your investment is backed by tangible assets. As a matter of fact, we like to encourage investors, please feel free to walk into assets, visit our assets, see how they operate, see how students are enjoying these assets, as that will give you a lot more, it will make you relax. Because one of the key reasons you're investing in land and real estate is you're looking for something secure. So we offer you an investment that is asset-backed. Key thing I mentioned earlier is that the product is regulated. We are regulated by the Capital Markets Authority. A key question I get from a lot of investors is that you have a platform, then you have a product. Now, in this case, the platform is regulated and the investment products offerings we offer are also regulated. I mentioned earlier that one of the key features of this product is that it is tax efficient. It's a tax efficient vehicle in a sense that you don't deal with stamp duty taxes, you don't deal with legal fees, for example. Your dividends is only taxed at a rate of 5% withholding tax, and your capital gains are not taxed. We do offer capital appreciation in a sense that you trade at net asset value, which is, we look at the total asset value, we deduct the liabilities, then we arrive at a net asset value, and investors trade at the actual value of the assets. Hence, as the asset value increases, you also benefit from capital appreciation as the investment value does increase. It is an affordable product. You can invest from as low as 2,500 bob. I know in the market today, a lot of people have looked at Vuka in the sense that the minimum investment is 5,000 bob. And this is one of the key features we plan on launching out today, in the sense that we are making Vuka a lot more affordable to you. Another key feature or benefit is that it's a liquid investment. What we mean by this is that we do have 2 trading cycles in a month. We have a trading cycle on the 14th of each month, and we have a trading cycle on the last day of each month. Now, to put this into perspective, if you wanted to liquidate your investments on the 4th, for example, on the 4th of April, it simply means on the 14th of April, you will be able to log into your platform and you'll find that your sell order has been fulfilled, and you can as you own the platform, you can withdraw your funds either to M-Pesa or bank, and this will take a period of 3 to 5 working days. And the most important feature that I like leaving for last is that despite enabling you to liquidate the investments quite quickly, despite changing how people can invest in real estate, one key factor that we always need to remember is that real estate does not lose the aspect of being a long-term investment. Even our product, Vaua Imara, the only way to get returns is the only way to get good and growing returns is by investing in this product for the long term. We have no lock-in period because we understand emergencies may pop up, and this is a key feature of the product in the sense that even an emergency was to pop up, we can still withdraw. However, we do encourage investors to have an emergency fund somewhere and also pick up wealth protection assets. And today, one of the key products we plan on launching today to our investors is Vuka Prime. Now, Vuka Prime will be your latest offering for retail investors seeking a higher return than Vaua Imara, with a blended exposure to the assets, balancing risk exposure, stability, and growth. Now, just to put this into perspective, a lot of our investors have always asked us, why can't we invest in the development side? Why can't we invest in the development-focused real estate? Now, I am here today to tell you that we've had it, and we are opening up this opportunity to you as our investors. It does not come to compete with our current product offering. However, it is a next step for you as an investor. Now, you'll remember, as Matthew talked earlier about the blended offering, this blended offering was initially open only to institutional investors since the inception of the ASA REITs. However, we are now opening it up to all investors who are in the gold tier and above. So what are the key features that this new product, if you call your Vuka Prime, offer you? One, it does offer a projected total return of 12% plus per annum. This is comprised of both dividends and capital appreciation. It does give you diversified exposure to the assets. This means that you now get to invest in both the development-focused real estate and the income-generating real estate. As a product offering, it will also be liquid in the sense that you will be able to liquidate your position twice in a month through the 2 trading cycles that we have. Again, it is also a regulated offering. Being one of the key questions we get from a lot of investors is, fine, Vuka is regulated. What about your offerings? Hence, we're also here just to assure you that all the product offerings we have are also regulated. You are investing in the REITs, which are listed under the Nairobi Securities Exchange under the unquoted securities platform. Last but not least, a key feature is that Vuka Prime is also a long-term investment. Again, we have no lock-in period, as we like to give the flexibility to withdraw in the event you have an emergency. However, we do encourage our investors to also look at this as a long-term investment. So how does Vuka Prime work, or how will it work? Now, a key message from here is that we're aiming to offer this as a structured, risk-managed investment approach. Now, you may recall, for those who've interacted with us, that when the blended offering was offered to institutional investors, it had a minimum investment amount of 20 million Kenyan shillings. Now, for Vuka Prime, what we've done, we've reduced the minimum investment amounts for you. However, for you to access Vuka Prime, one, you have to invest in Vaua Imara first, which in this case, if you're a current investor and you have 200,000, for example, in Vaua Imara, you get a chance to invest up to 300,000 in Vuka Prime. If you come in as a new investor, let's say you want to access Vuka Prime and you come in with 1 million Kenya shillings, it simply means that 400,000 will go to Vuka Imara and you can invest the other 600,000 into Vuka Prime. Now, this is our way of offering you a risk-managed investment approach. However, key to note is that if you feel that you simply want to stick in the current product offering, that is also fine. However, if you want to boost your returns and get more returns than what is offered by Vaua Imara, you can invest up to a certain amount in Vuka Prime. And this is not the limit. You can come in with 5 million Kenya shillings or even up to 10 million Kenya shillings and more. The structure will remain as this. However, the team will be on hand. Our internal advisors will always be available to help you understand this product as we go along. So what is the product differentiation between these two products? Now we will look at these few factors in terms of return, in terms of the qualification criteria, in terms of the minimum investment, in terms of risk profile, and in terms of the ideal client. Now, if you look at the return factor when it comes to Vaua Imara, it does offer consistent dividend payments and capital appreciation, which is paid out to you as an investor yearly. Vuka Prime, on the other hand, offers a projected return of 12% plus per annum. If you look at the qualification criteria for Vuka Imara, there is none. Any investor can come into the investment vehicle and you start your investment with a minimum of 2,500 Kenya shillings. If you look at the qualification criteria for Vuka Prime, is that it is available to investors currently in Vuka Imara in the gold category and above. Now, a key thing to remember is that these products complement each other. It's not that you can simply come in and choose it. You will want to invest in Vuka Prime only. Remember, we are trying to give you a risk-managed approach towards investing. Hence, it will be open to you as you've invested in Vuka Imara first, then you can access Vuka Prime in terms of minimum investment under Vuka Prime. You can invest up to 300,000 as starting amount, keeping in mind that you've invested 200,000 in Vaua Imara. If you look at the risk profile, Vaua Imara is the lowest product as it allocates 100% of its funds into income-generating assets. Vaua Prime gives you a bit more risk exposure as you invest in the development-focused real estate, hence it offers a low to moderate risk. If you look at who's the ideal client for each of these products, Vaua Imara is ideal for conservative investors who prioritize stability, low risk, and capital protection while seeking steady and predictable returns, while Vaua Prime is ideal for growth-oriented investors seeking growth opportunities with higher returns and are willing to accept market fluctuations. Now, part of our future plans with Vuka is simply enhancing Vuka for you. This just goes to show that we've had your feedback. We keenly listen to what our investors keep telling us, and we will just be launching a few features this year in 2025. Now, if you look at our current features, and we'll just go through them one by one, is that currently we do charge a joining and up with these starting from $299, in the sense that if you started investing in Vuka, you will start at the silver category and you will pay a joining fee of $299. If you wanted to invest more than 100,000, you will upgrade to a gold tier and you will pay 200 Kenya shillings in this case. Now, one of the new features we plan on launching out to investors is that we will be removing all joining and upgrade fees as from 5th April 2025. And I believe this will be a key offering, a feature that a lot of investors will be pleased to hear. Look at another key feature in our current offering is that we do have a 1% sending fee, which has been there for a period of time. We are looking at reducing that fee to 0%, again, as from 5th of April. And this means as from 5th of April moving forward, if you wanted to sell, you will not be charged a 1% sending fee. And again, this is simply from the feedback we've gotten from you that you want Vuka to be more affordable, that you want to enjoy the returns that this product offers. And we're just going to show that we actively listen to you. Another key feature that we've always had is that Vuka has always been an exclusive invite-only club. Hence, we've always had an invite-only portal in a sense that someone has to send you an invite to your email. Now, another key feature we'll be launching out in 2025 and probably in the month of May. We will be launching a self-onboarding platform, enabling you to create an account from anywhere in 5 minutes without requiring to send an email or looking for an existing investor or having to reach out to Vuka. However, our team will always still be available to offer you any information that you may require about Vuka. Now, over time, again, in our current features, we've always been a web-based application. I believe one of the key questions you always get from every investor is, why don't you have a mobile app? when are you going to do a mobile app? Hence, we are excited to announce that we will be introducing a Vuka mobile app, and this will enable you to invest and manage your portfolio seamlessly anytime, and you plan on launching this the second half of 2025. A key feature that comes up a lot is why can't we use our units as collateral, or rather use our units to secure a loan? Hence, we've listened to this feedback as well, and we will be looking at various partnerships, and we hope to launch later in the second half of this year the ability to use your units as collateral. I think another key feature that we launched late last year in Q4 is that we launched 2 trading cycles in a month, and this is to simply improve liquidity. And in the future, we will be analyzing this, and we may increase the trading cycles for the benefit of our investors. Now, as I come to an end, I just have 4 key takeaways. And this is just to enable you to understand Vuka and what Vuka is all about. And one of those key takeaways that we tell any existing new investor is that Vuka is to be considered as an alternative to direct real estate. Again, you cannot compare the profile of Vuka with a money market fund or a bond. Hence, we position ourselves as an alternative to direct real estate. Another key thing to look at, and it's one of the reasons we invest in real estate, as we're looking for a secure wealth preservation tool. Hence, Vuka is indeed a secure wealth preservation tool. We'll remember that during my presentation, I took you to the aspects that they offer you capital appreciation and principal protection as well. Another key takeaway to remember is that Vuka remains a long-term investment, despite the ability to liquidate. If you were to invest today, you can still liquidate the next month. You do position Vuka as a long-term investment, and we encourage all our investors to look at this investment as a long-term investment. And the final key takeaway is that Vuka is an important tool for a diversified portfolio. Ideally, you should not look at Vuka in comparison to other investments. It simply comes in to complement the other investments in your portfolio. And at that juncture, I will open up a session of a Q&A session, and I look forward to engaging with you.